Presented by eBix Cash. हर खुशी के लिए काफी है.
Good evening and welcome. You're with us here on Business Today. I'm Abha Bakaya. Let's take you through the headlines. Finance Ministry raises objections to stringent draft e-commerce rules could lead to softening of some tough provisions. After announcing major reform in key economic sectors, Prime Minister Modi off to the US will meet top business leaders on Thursday. Exclusive coverage from the US trip later on the show. Sensex ends a choppy session 78 points lower. Nifty slips below 17,550. Media stocks in the limelight. Zee Entertainment shares zoom 32% on proposed merger with Sony Pictures. The new rules aimed at tightening screws on e-commerce in India could come a cropper. A report by news agency Reuters suggests that several ministries have spoken out against the proposed rules, with even the Finance Ministry describing them as excessive and without economic rationale.
The Tata Group was the first to speak out against them, calling the rules prohibitive, which would prevent its group companies from selling product online. The reaction was swift, with Consumer Affairs Minister Piyush Goyal slamming the Tatas, asking if its own interests were greater than that of the nation. Now it appears Tata is not the only one unhappy about the rules. The opposition is right in the middle of the corridors of power, within the Finance Ministry, the Corporate Affairs Ministry and the Niti Aayog. In what would have been a major blow to the e-commerce industry, the Consumer Affairs Ministry in June had proposed several measures to limit the very popular flash sales as well as restrict the use of own labels by companies like Amazon and Flipkart. There is also a proposal to restrict so-called related parties from enlisting as sellers. The rules were in reply to complaints by brick-and-mortar sellers. The Finance Ministry has reportedly listed a dozen objections, saying the rules are excessive and will hit job creation and tax revenue generation. Calling flash sales a regular festive feature, the ministry says the proposed rules will hurt ease of doing business in the country. Niti Aayog has claimed the restrictions on e-commerce activities will hurt small businesses and also push India as a country with unpredictable and inconsistent policies. The Corporate Affairs Ministry has termed the clause of e-commerce companies not abusing their dominance as unnecessary and superfluous, saying the consumer laws cannot include a mini competition regime. The task for the Consumer Affairs Minister won't be an easy one. On one side, he has a very vocal lobby of states, industry bodies, retailers seeking to lasso e-commerce companies, and on the other, pressure to give the consumer-friendly sector a free rein. Bureau Report, Business Today Television.
Investors and MSMEs will now be able to get a number of approvals online from a single window. Commerce Minister Piyush Goyal today launched the National Single Window System portal, describing it as freedom from bureaucracy and from windows within windows. The portal already has approvals across 18 central government departments and 9 states. Another 14 central departments and 5 states will be added by the end of this calendar year. Services offered include Know Your Approval, Common Registration and State Registration forms, document repositories and e-communication.
Finally, we are able to showcase the result of an arduous journey, a very, very difficult journey over the last nearly 18 months. Very significant outcome, the soft launch of the National Single Window System today. It is truly a major step towards ease of doing business and ease of living for the common man. This Amrit, I think, will bring power to India's business ecosystem.
The RBI governor has called for the need to plan for a stronger and fairer domestic economy, calling the COVID pandemic a watershed event. Shaktikanta Das said the maximum effect of the pandemic has been on the poor and the vulnerable. Hailing the government's PLI scheme, which he said will boost manufacturing, the central bank governor claimed the Indian financial system is moving from bank-dominated to a hybrid one. The governor said fintech, edtech and e-commerce companies have emerged stronger from the pandemic.
After an 18-month-long battle, there are signs, and I repeat, signs, that the world is emerging from the shadow of the coronavirus. As we look beyond, this is the right time to step back a little and plan for an economy which is stronger, more inclusive, and sustainable. COVID-19 is a watershed event in our era. It has caused widespread devastation of life and livelihood, and it is still haunting the global economy in several ways.
Prime Minister Narendra Modi this morning left for his first visit to the US since COVID. During the 5-day visit, Modi will be meeting the US President and Vice President, the Quad leaders, the Prime Ministers of Australia and Japan, and in an important meeting as well coming up on the 23rd, CEOs of 5 top US companies. This includes Tim Cook of Apple, who is rumored to be among those who will meet the Prime Minister. Business talks are expected to focus on trade and investment ties, strengthen defense collaborations, and boost clean energy partnerships. Geeta Mohan joining us from New York on this story. Geeta, quite a high-profile trip. This is the first meet between the Prime Minister and global business leaders. In fact, tell us what else is going to be on the agenda. First time they're meeting since the outbreak of COVID. What are the kind of expectations from this meeting?
Well, it is true. It is the first one. A lot of conversations on post-COVID recovery of the economy, not just here in the United States of America, but also in India. There have been conversations in the past as well with regards to how the business community now can contribute and come forward to really looking at investments and conversations that were on before COVID to take them forward. It has been an uphill task for manufacturing and investments to come to India. But a lot of conversation will take place in a post-COVID scenario, not just to do with economic recovery, but also to do with key supply chain resilience. Looking at China, knowing that during COVID, how China had played a very important role and was critical in most of the equipments that were required across the world. That was an eye-opener for the world, and there is going to be a lot of conversation on how to move supply chains and how India can become and play an important role, Taiwan included, can play an important role in becoming a key link in the supply chain that we see, the global supply chain. And in that context, there is going to be a lot of conversation with regards to manufacturing and investment in the manufacturing sector from the US to India. There are some important meetings that are lined up. We are given to understand that Apple's Tim Cook is going to meet Prime Minister Narendra Modi. There is no fix on time yet, but that's what we're given to understand. There is going to be a lot of top CEOs and business honchos who are going to appear at a Hotel Willard where Prime Minister Narendra Modi is staying, to meet him, to have that conversation and to take that conversation forward.
Geeta, the US has seen a lot of changes since Modi was there last. What kind of reception is he expected to get?
Well, the United States of America, because of COVID, has a lot of rules and restrictions and regulations. In closed spaces, you cannot move without wearing a mask, so everybody's masked up. When we talk about gatherings, there can't be large gatherings, so we'll have to wait and see what's the permission that the Indian community has taken to really stand outside Hotel Willard. It is going to be maybe a low-key reception, but one nonetheless where Prime Minister Narendra Modi will be welcomed very warmly by the Indian community. He still has a huge following here in the United States of America. A lot of people, not just from the Indian community, but otherwise also follow Prime Minister Narendra Modi. And yes, so it is going to be warm, but it is going to be one that is going to also be muted because of the COVID restrictions. New York and Washington DC both have had a severe bout when it comes to how they've handled COVID, the rise of COVID cases, and that's the reason why there are strict rules and regulations in place.
after choppy moves throughout the day, benchmarks ended just a touch lower. Remember, we're watching out for the Fed meeting outcome, and news flow over the Evergrande debt crisis still continues to kind of hover over the market. Sensex down just a touch today, closing at 58,927. The Nifty also down just a few points at 17,546 by the end of the session. Little bit of pressure coming in on the Nifty Bank today. Let's take a look, in fact, at some of the gainers and losers. In the session, we had Coal India, Tech Mahindra seeing gains of about 3.5%, Hindalco, Tata Motors, M&M. Some pressure being relieved of some of those commodity names after the initial knee-jerk reaction to the news in China. Auto names also seeing some buying coming in at lower levels. Nestle, HDFC, ICICI, ONGC and HDFC Bank making up the losers list. Banking definitely did see some amount of pressure coming in today. In a surprise move, Zee Entertainment has announced its merger with Sony Pictures India. Sony will hold a larger stake in the merged entity, which will be headed by Puneet Goenka, the current MD and CEO of Zee. The move is a win-win for both.
Subhash Chandra led Zee Entertainment announce the approval of its board to merge with Sony Pictures Network India Wednesday morning. In a filing to stock exchanges, the company announced that Sony will invest an additional $1.575 billion in the new entity and own 52.93% stake in it. Zee will own the other 47.07% stake. Puneet Goenka will head the proposed company, which will be listed in stock markets. However, a majority of the board members will be appointed by Sony. Subhash Chandra family, the promoters of Zee Entertainment, have the option to increase their stake from 4 to 20%. The merger is a win-win for both. The joining of hands between Zee and Sony creates an entertainment behemoth with combined revenues of 19,000 crore rupees. Zee already has a wide geographical presence with channels in various regional languages. Sony brings with it expertise and the license to air some of the biggest sports events. The new company will have 75 TV channels and the combined might of 2 OTT apps, ZEE5 and Sony Live, with the potential to rival Netflix, Amazon Prime and Disney Hotstar. The merger also brings together 2 film studios and a digital content studio. The 2 companies have given themselves an exclusive period of 90 days for due diligence and other formalities. The merger also needs the crucial Competition Commission India nod. Bureau Report, Business Today Television.
Food regulator FSSAI has introduced a third logo for identifying a food type, that for vegan food. It already has mandated a green dot for vegetarian and a brown dot for non-vegetarian food. The logo comprises a large V in a green square with a small plant symbol, as you can see there on your screen, in the middle of the V. The word vegan is written at the bottom of the square. The regulator's move reflects the increasing vegan consumption that we're seeing, which includes any kind of animal product, including milk and honey, and even materials of insect origin like silk and dyes, for instance. The vegan movement has given rise to plant-based drinks and even faux meats. The logo will have to be printed on all packets of vegan food.
I think all consumers are by and large aware of the green dot and the brown dot now, which is for vegetarian and non-vegetarian food. But beyond that, now all over the world, there is a growing movement towards veganism. There are many people who are allergic to milk and therefore they want to avoid animal products at all, completely. For them now we have come out with the vegan logo, which would help people make a choice. Traditionally, non-vegetarian diet and vegetarian diet was separated by milk was, for instance, dairy products were a part of vegetarian diet. But for vegan diets, there should be nothing of animal origin at all. So those who are vegans don't consume milk, they consume soya beverages or some such products which are purely plant-based. So vegan diet is completely plant-based.
As always, every Wednesday, we take your stock market related queries on Ask Udayan, our special segment where our global business editor Udayan Mukherjee answers all your questions. Let's begin then today. We do have a series of questions lined up, starting off with Milan Banerjee, who's also sent in his query. So let's actually first listen into this.
I have a question regarding the company Laurus Lab. I have bought 1500 shares of Laurus Lab at the rate of 100 rupees per share. I would like to hold this company for a longer period of time. I would like to know about your view about Laurus Lab for 3 to 5 years time horizon?
Well, that's an excellent time horizon for Laurus Labs because it is really a long-term investment kind of stock. I like Laurus Labs because of its business mix. It's got a very balanced portfolio between APIs, which is bulk drugs, formulations, and custom synthesis, which they're quite strong on. And going forward, they will add on things like biologics. They already have it, but biologics will grow as a portion of their revenue quite significantly in the years to come. So between bulk formulation, synthesis and biologics, they have a really nicely balanced portfolio, and that will ensure that Laurus keeps growing at 25% plus over the kind of time horizon that you are talking about. Now 25% plus, given that it's got a very clean balance sheet and the fact that it reports return on equity of 40% plus, makes it a fairly attractive pharmaceutical stock to bet on. And it's not terribly expensive, despite the fact that the stock is up, 75% over the last 6 months. So it's had a huge rally, but even so at 21, 22 PE multiple, if you're looking at FY23, it's not really the most expensive stock in the market at this point. So reasonable plus valuations, a good portfolio, and very strong runway for growth makes Laurus a fairly attractive long-term bet. This is not a recommendation to buy the stock, but since you already own it, I think you've probably chosen a fairly good bet for your portfolio.
Okay, another question coming in from Parmeshwar Das. Let's listen into this. He joins us from Panaji.
What do you think about Yes Bank? Do you feel it will come back soon? I am holding some stock in Yes Bank. And do you feel that it will come back? Should I wait for some time? What will be your advice?
Well, I can understand the attraction of a Yes Bank for most retail investors and traders, because while everybody knows that it's not the best bank to own in your portfolio, the fact that it moves so swiftly and you can get a move from 11 rupees to 14 rupees in just a week's time, and that's a 25% plus return, which ordinarily will not get from a stable bank like HDFC or Kotak or ICICI over that short a period of time. So the ticket size, I think, is the attraction for most retail traders and investors. And Yes Bank seems to have put, after all its troubles, it seems to have put some of it behind itself. The CASA book is growing quite nicely. They have provided for a lot of their non-performing loans, but I still think there is some problem with their asset book, both on the corporate front and on the retail book. So I don't see Yes Bank having a clean run on profitability over the next 2 or 3 years as some of the other private banks may. You could get trading pops from time to time, and the stock has had a rally, nice little rally, but I think it will probably stabilize in this 12 to 14 rupee kind of a zone and need to consolidate, because it just doesn't have the kind of earnings power which will drive the stock beyond that 14-15 rupee mark. So I see it as a range bound stock, and if you are a long-term investor, there are far better private sector banking names to be betting on rather than Yes Bank.
Vibhor Saini also has sent in his query. He's joining us from Noida, and he has a question on Vodafone.
Hi Udayan, my question to you is this the right time to invest in Vodafone Idea now that the government has given them relief and support package? Please suggest.
Well, the support package is very handy for Vodafone. I think frankly, without the support package, Vodafone Idea would probably have not lasted this year out. But now with the moratorium on AGR dues, the spectrum duration changing, I think it's quite conceivable that Vodafone Idea will not die immediately. It won't go bust. Does that mean that it's a great stock to bet on? I would hesitate to say that because from a business point of view, the telecom market might not become a duopoly as people were fearing earlier quite so soon. But from a stock market point of view, I think it has always been a duopoly and will remain a duopoly. There are only 2 stocks you can play from the telecom sector. One, if you want to play the Jio story through Reliance, and of course there is Bharti, which are pure play telecom. But beyond these 2, I would not look at telecom, which anyway is a fairly difficult sector. So in a twisted way, the fact that Vodafone has got relief probably augurs well for the Bharti stock, because it will be a 3-player market for the moment, and I think Bharti will slowly keep eating away at Vodafone's consumers, as will Jio. So I suspect that those are the two stocks to be betting on because Vodafone's future is still quite bleak. They need capital infusion, they need to raise tariffs. So it's just not enough to say that they will survive. So the stock has rallied very swiftly in the last few days, but I think it might provide an exit opportunity for people who are stuck. So I don't see huge upside potential for the Vodafone Idea stock from a fundamental basis.
Okay. Hemant has also written in from Abu Dhabi. He also has an interesting question. Let's hear him out.
I would like to know your views on aviation sector stocks, specifically SpiceJet, around their freight business, and Boeing Max is coming back into action. Your views around these stocks will certainly help us in investing.
Aviation has always been a very difficult sector, and while it is true that post-COVID demand is improving, I still think there is a profitability issue with most of the aviation companies. I mean, even if you see their recent reported numbers, both Indigo and SpiceJet, they're not exactly reporting great profits. I mean, they're still mired in losses, in fact. So demand is improving, but because of the spike in the price of fuel, aviation turbine fuel, and the fact that yields have not gone up very significantly, their profits and margins are being compressed. So I don't see Indigo or SpiceJet actually reporting healthy profitability in the next few quarters, given these constraints. Also taking into account the fact that Indigo and SpiceJet have both rallied quite a bit, Indigo particularly, I think it partly captures the fact that there is some demand recovery underway. So given these current valuations, I would be hesitant to buy or own Indigo at this point in time. On SpiceJet, the problem is that they need liquidity infusion quite soon. Their balance sheet is not healthy at all. And while they are trying to move their cargo business to their subsidiary Spice Express, in which presumably they will want to raise some capital, I still think it's a bumpy road ahead. And keep in mind that it seems after a long time that the Air India disinvestment might go through. And in a scenario, if someone like the Tatas were to go and acquire it, there could be greater competitive intensity in the aviation sector too going forward. So keeping all this in mind, I would say there are far greater sectors to be betting on in the market today, and I would probably give aviation a pass.
Udayan, thanks as always for taking the time out to answer those queries, and we'll continue to answer more of your stock-related queries here on Ask Udayan every Wednesday. Moving on to our daily cryptocurrency price check brought to you by CoinDCX. Cryptocurrencies continued their southward move on Wednesday thanks to volatility in global markets amid negative news surrounding the Evergrande crisis from China and the US FOMC meet outcome. Bitcoin fell by 3% while Ether saw a dip of 5.25%. Other coins including Ripple, Polygon and Tron also fell amidst the global crypto market cap tanking over 3% to $1.84 trillion. Total crypto market volume declined more than 12% to $136.3 billion. That's all we have time for on the show today. Thanks so much for watching. Good night.